Today we're doing something a little different. We're going to skip right past the polished, prepared remarks from Nike's latest earnings call and jump straight into the fire, the Q&A. This is that unscripted moment where Wall Street analysts really put Nike's leadership in the hot seat to find out if this big turnaround plan of theirs is just talk or if it's actually the real deal.
And that really is the multi-billion-dollar question, isn't it? After a really tough stretch, Nike's execs are out here saying they're back on the offense, but are they? Let's break down their answers to some of the toughest questions they faced and see if we can figure that out.
All right, so here's our game plan. First, we'll set the scene for this analyst showdown. Then we're going to look at the early wins Nike's CEO is so keen on pointing to. After that, we'll dive into the major headwinds that are still a huge problem, get into the weeds on a serious margin squeeze, and then finally, we'll look at what they say is the road ahead.
Okay, so just picture it. The official speeches are done. Now it's game time. This is that unscripted, high-stakes part of the call where analysts get to poke and prod, look for weak spots, and flat-out demand proof. You know, this is where the real story usually comes out.
You know, all the questions really boil down to one thing. Are these new strategies, this win-now plan for the short term, and the big sport offense reorganization, are they actually moving the needle? The analysts, they didn't want any more buzzwords. They wanted cold, hard evidence.
So when he was pressed for that proof, Nike's CEO, Elliott Hill, he was ready. He was quick to highlight some specific bright spots. You could say these are the green shoots he's using to make the case that the turnaround is already starting to work.
And there it is, straight from the top. He immediately put the spotlight on the running category. This was his Exhibit A, the prime example he wanted everyone to focus on, to show that the new playbook is working.
And here's the number to back it up: 20% growth in one quarter for the running business. That's a really powerful data point, and it shows that in this one very important area, their strategy is delivering some pretty significant results.
But here's the thing. He didn't stop at running. He tried to paint a much bigger picture of momentum. North America, their biggest market, is back to growth. Wholesale partners, who'd been getting pretty skeptical, are apparently trusting them again, with spring orders up. And they're taking that successful playbook from running and starting to apply it to other huge sports, like football. These are the signals they want investors to see.
But, okay, let's not get ahead of ourselves, because this story is far from being a simple success. For every early win the CEO brought up, an analyst was right there with a question about a major headwind. The picture is, well, it's a lot more complicated.
And this contrast just says it all, doesn't it? On one hand, you have North America leading the charge. On the other, you have Greater China, which is a huge problem. The execs admitted it's facing structural differences, which is code for deep issues, with store traffic and actual sales both declining. They've put China on a completely different timeline for recovery. That's a pretty clear signal that there's no quick fix coming.
And here's another huge red flag the analysts jumped on: Nike's digital business. Traffic to their own websites is down by double digits. In today's market, that's a massive concern. So what's the explanation for that?
Well, believe it or not, management's answer was basically, we're doing this on purpose. Yeah, they say they're engineering this drop. They're cutting back on all those promotions and pulling back on paid ads to try and improve the long-term health of the brand. And a huge piece of this is rebuilding trust with their wholesale partners by not constantly competing with them and undercutting them online. It's a painful move for sure, but they think it's necessary. Okay, let's talk about the money, because even in the places where sales are looking better, Nike is facing a really serious squeeze on its profits. And that's thanks to some major new pressures that came up again and again in the Q&A. And the big villain in this story is something called reciprocal tariffs. Now, this isn't just some small tax hike. The CFO explained these are new tariffs getting, and I quote, stacked on top of what they already pay. So it's creating this massive, unexpected cost that hits them directly.
And the impact is no joke. It is so big that the CFO had to use the word moderated when talking about their profit outlook for the rest of the year. Now that's Wall Street speak for, yeah, it's going to be lower than we told you before. It just shows you how serious this financial pressure really is. But even with all that immediate pressure, the CFO, Matt Friend, was really adamant about the long-term goal. He said multiple times that he believes the return to healthy, double-digit profit margins is still achievable. So the message is pretty clear. This current pain is temporary, but the long-term financial picture is still strong.
So, let's put it all together. What does the path forward actually look like? Well, based on everything we heard in the Q&A, it is crystal clear that different parts of this massive business are moving at very, very different speeds.
And this chart really just captures that whole story perfectly.
On one side, you have their wholesale business, sales through partners like Foot Locker. They expect that to get back to some growth this year. But then you have their own Nike Direct business, their website and stores, which they're saying is not expected to grow at all.
So the bottom line is, this is not one single unified comeback story. You can see it right here. North America and the wholesale channel are the engines right now, but Greater China, the Converse brand, and Nike's own digital channels, they're all expected to be a drag on the company for the rest of the fiscal year. If there was one thing the execs repeated over and over in their answers, it was this: progress will not be a straight line up. They are managing an incredibly complex global turnaround, and they're basically trying to prepare everyone for a long journey, a journey with a lot of bumps in the road. It's a marathon, not a sprint.
Which of course leaves us with that final, critical question. Nike's leadership, they have a plan. It's a challenging one, but it's a plan. And they have some early proof points to hang their hat on. But in a world with nervous consumers, new tariffs, and these really deep-seated problems in key markets, is this new sport offense really going to be enough to win? I guess only time will tell.